Hello everyone, warm greetings from GirlScript Goa. Happy Liberation Day to one and all. I am Kripashri Kohli and I am extremely excited to welcome each one of you. I would like to start with introducing GirlScript. GirlScript is a Section 8 non-profit company. It is open for all organizations and support beginners in technology and programming. It also supports diversity by reserving 50% seats for women and LGBT in all its programs worldwide. The name is GirlScript because we want more women to be a part of the technical industry. We support diversity in tech. Although it should be remembered that we are not only women organization and we welcome everyone to join us irrespective of age, color, caste, nationality, religion or gender. GirlScript has 5 chapters. Until now, we have organized numerous events on data science, game development, digital marketing, AI, cybersecurity, and so on. Let us move forward, putting some limelight over few initiatives by GirlScript Foundation. We present to you Yay! It is the first ever reward based personalized live interactive learning platform. It has live classroom where you get personal counseling. The projects help you to enhance your portfolio and get motivating rewards. So do check it out. Now I want all your attention here. Presenting to you GS Cup. GS Cup is community-based event that will promote and encourage the students who have contributed to any community. GS Cup will be awarded to the students who will score the maximum number of points according to the guidelines and contribution he or she has given to the community. Now, there will be 2 categories for the event. First, everyone. Second, for the Girl Script family. In the GS Cup, you will be awarded with points on a scale of contribution you have made to the community. All you have to do is first select the leaderboard category, second, select contribution category, that is reward point, third, submit contribution details and proofs, and fourth, we just wait for the verification. So after the verification, reward points will be credited to your account. So do check out about Yay and GS Cup to get amazing rewards. Now I would like to request Akanksha Parsekar to take over.
Thank you, Krupa. Good afternoon, everyone. Wishing you all a very happy Liberation Day. GirlScript Goa has a small surprise for all of you. What is a learning session without rewards? Post a talk, a link for a small quiz will be shared to test your knowledge based on stock market. The link will be shared on the screen, dropped in the chat section of YouTube, and shared on the group. Upon successful completion of the quiz, you will receive a certificate of participation from GirlScript. Even if you haven't registered for the event, go ahead and answer the quiz as your certificate depends only on the quiz. So make sure you pay attention to the talk and make the best out of it. Moving ahead, let's begin with our session titled Stock It Up. Stock market is a place where shares of public listed companies are traded. It is a place where individual and institutional investors come together to buy and sell shares in a public venue. Purpose of a stock market is to regulate the exchange of stocks as well as other financial assets. It is one of the most valuable components of the market economy and creates a lot of opportunities. Today we have Mr. Anil Karna with us, who is a stock market trainer and an adjunct professor at Universal Business School, Mumbai. He has expert skill and knowledge in the field of corporate training for various topics related to soft skills, digital marketing, social media management, stress management, and so on, and has more than 15 years of relevant corporate exposure, plus business school expertise in various positions at multiple levels. He has worked for several companies at the management level in risk management, corporate finance, and many more senior roles. He has been a trainer on stress management and work-life balance for all regional branch managers of Punjab National Bank, as well as conducted inbound and outbound training for many companies, including IDBI Bank, Punjab National Bank, Godrej Industries, Relaxo New Delhi, and many more. Currently, he is a strategy consultant to various brands and is associated with the training curve in mentoring and student training. I will now request Mr. Samir to take over.
All right. Um well, what I can say, thank you so much, Akanksha, for this very kind introduction. I think we are all students when it comes to the equity markets. We are all learning. We all keep on evolving with experience. As they say, time is the best teacher. So nowhere else you will find this maxim working rather than the equity markets. So on this occasion, I welcome all of you to Stock It Up, where we are going to discuss the basics and the fundamentals of equity investments. And towards the end, I would also love to interact with participants or maybe take your questions so that I can answer and do justice to your participation and for the fact that you have spared your time to attend this talk. So thank you, GirlScript. I think it's a great initiative. You all are really doing a lot of good work, and I appreciate what you all have done. You all are doing. Wish you all the best. And with that, on that note, I think we'll start our session. Some fine points, ladies and gentlemen. Most of the time during the session, you will see that my screen will be shared, or we'll be discussing some basic concepts. The idea of each of our session that I deliver or I take on is, when the candidate goes back home, anyone who's listening to the session, when you turn off, it's a Saturday, when you turn off for the day, you should have at least three takeaways, at least three main takeaways from every session. So that is the whole idea and objective of delivering training programs. And I've been doing it for the last 15 years. Stocks is something which is just a small part of a larger, financial paradigm. And we'll discuss with some basic concepts. I'll share my screen also, and we'll keep on, learning, unlearning, and relearning from each other. I'm sure all of you might be interested. This is one field where a lot of people, they come and ask us that, we want to make money. But when we ask them, do you have time? They said, no, I want to make quick money. So let us clear the clutter in the beginning. There is no way somebody can make quick money in the markets. You cannot time the markets. You have to spend time in the markets. It takes at least a decade or 15 years or maybe more in some cases to make that quantum leap in terms of creating money and generating wealth for you, for your family. So we'll just see how all this works. uh, Fortunately for all of us, there is a lot of technology that is being used these days. So this field also has a technology edge. People who are tech savvy will understand the algorithms faster. They will understand the patterns faster. It's all about understanding technical patterns more than the fundamental reality of a company. Of course, what we teach is both techno fundamental criteria, and I would like to mention that we as in my consultancy, we have shortlisted 36 criteria. So if any company that we are looking to invest, even if they pass 27 out of these 36 criteria, you've got your money making machine. It is as simple as that. We've made like a software, a filter where 36 means 27 criteria the company needs to filter out on the positive side. So Akanksha, can I start sharing my screen? Can we continue with the content?
Yes, sir. Yes,
With
sir.
your permission.
Yes, sir.
Okay.
You can.
Thank you. Thank you. All right. Yeah, so as all of you can see on your screen, there'll be less of my voice and more of the content, because today, as we all know, content is king. Um, the source of the slide is very well mentioned in the slide itself, and most of my slides are normally sourced through public domain. Nation Next had given us this beautifully made slide. It's not some rocket science, but what they've shown you is, if you look at our country's history, okay, before we get into finance and numbers, if you look at India, first of all, anyone looking to make money in this country has to understand the syntax or the grammar of this country. The grammar of this country is not like US or UK or Japan or Germany or any one of these other first world countries. What do I mean when I say grammar? If any of you young people watching this telecast, this live screening, if any one of you would have come to India somewhere in 1984, okay, hypothetically, and if I would have met you then and I would have told you that, why are you here? Why have you come here? And you would have told me that, I have 1 lakh rupees. I want to invest in this country's markets. I want to make money. And what if I told you in hindsight, retrospective, that in India, 1984, there are going to be political goof ups. There are going to be people who are going to ask you money on the streets. They're going to be beggars. 1991, India is going to pledge its gold to IMF. We are going to conduct the nuclear tests. There will be economic disparity in this country all through the 90s. There will be political disruptions. Kargil wars will be fought. Y2K will happen in 2000, which did not affect us, but it did affect a lot of IT companies. And then there'll be tsunami, there'll be demonetization, there'll be GST and NBFC trouble. What if somebody told all this to you 35 years back, 36 years back to be exact? You would have said, sorry, boss, I'm going back. I don't want to invest in this country. I'm not interested, right? So the point I'm trying to make is, we always overestimate the present and we always underestimate the future. Guys, in the last 36 years, all these events have happened in our country. All this has happened in our country, and that brings us to the first learning in finance. Don't overestimate the present and don't underestimate your future cash flows, which means this country is going to grow whatever it takes. Okay, all this will keep on happening. You will see political disruptions, the farmers are going to protest. I respect all of that, but that doesn't stop the growth and the finances of this country from growing, because we have 132 crore people in this country. We have 132 crore mouths to be fed with products, with finances. So this country has no other choice but to grow, ladies and gentlemen. So don't let these factors which are going around you affect your financial decisions. We call this, in the world of finance, we call this, it's not my term. I read this term in a book called Common Stocks and Uncommon Profits. It's a bestseller. It's written by Phil Fisher, and he writes this, all this news that you keep hearing around, which is just distracting you. He calls scuttlebutt. And I quote Phil Fisher. He says, "There's a lot of scuttlebutt in India. There's going to be a lot of such scuttlebutt, but the fact of the matter is, whoever invested 1,000 rupees, just 1,000 rupees in 1990 in a company called Asian Paints. Example, I'm taking a hypothetical example. If anyone had the wisdom and the gumption to invest 1,000 rupees in Asian Paints in 1991, you know how much that amount has turned out today? 1,000 invested and just held on for 30 years. Today, that amount is 18 lakh rupees. Yes, it might surprise you, but it is matter of fact, the company has grown 1800 times in the last 3 years. And that is the beauty of this country. The growth is not visible on media channels. It keeps on happening because India grows at night. India does grow at night. When all of us are put to sleep, Our country is growing when we don't even realize it. Let me give you some numbers in perspective very quickly. Have a look at this company. We'll be discussing a lot of practical examples and then I'll tell you how we spot such multi-baggers. If you look at this graph, what I've highlighted for y'all is, and this is only till June, huh? This is only till June price. I've not even taken Titan today. The one share of Titan today costs you 1500 rupees, by the way. I'm not showing you that growth which happened post pandemic. I'm showing you within the pandemic. Between 20th of July 2001 to 20th June 2019, only till 2019, pre-pandemic levels, Titan as a company which we all know, you might be aware very well, has given us return on your money of around 66,000%. Can you ever imagine this kind of growth rate in any other business, ladies and gentlemen? No, you can't. It is only the equity markets that give you such a heads up. The money has grown 1500 times in Titan, and in Asian Paints it took 30 years. In Titan it took 19 years only. So this is the power of long-term thinking. This is exactly the power of parking your money and forgetting it and let it grow like a money plant. You know, they say watching money grow is like watching paint dry or watching grass grow. It is that slow. The process is very slow, but you need to be a test match batsman rather than a T20 or a one-day player to understand how money grows. You need to stay invested for 15 to 20 years. So, second point of bone of contention today, don't look at making fast money. Look to stay invested, working on your other jobs, but let your money grow. Keep investing and let money grow by itself. It will take 15 to 20 years for your regular investment to give you 1 crore or 2 crore. It is possible, it can happen, but it won't happen in 5 years or 10 years. It takes minimum 15 to 20 years, 2 decades. And for all of you who are pretty young, like 24, 23, 20, this is exactly the age to start investing. Let me clear one more myth here. The stock market is not a gamble, ladies and gentlemen. It's a very strict, technical, logical process. It's not a gamble at all. Let me show you another example. This is a company called HDFC Bank. Again, taking a pre-pandemic example, because what has happened post-pandemic is all these companies have grown further. You know, HDFC Bank also today is around 1420 rupees per stock. But I'm taking the pre-pandemic growth. This company has also given you returns of 16,000%. This is 16,000% from 1999 to 2019 in the last 20 years. Why are all these Indian companies growing so much, and why that a lot of young people are unaware about it? Why do we have to keep shouting from the rooftop that, hey, you know what? Why don't you have a look at HDFC Bank's annual report? Why don't you look at Asian's annual report? Why? Because I'm so happy and I give credit to GirlScript that they picked out this topic. Ladies and gentlemen, in our country, there is tremendous illiteracy in finance. Let me be very honest with you. We are a literate country by all means, like people will pass 10th standard, 12th standard, and graduation. But in terms of financial literacy, we are way backwards compared to the other side of the world. When was the last time, you can ask your parents, when was the last time they invested their money in a stock? Or when was the last time they told you? You can check for yourself that, you know, the stock markets is good, it is going to make you money, please go and invest. Nobody does that. At least I think till the last decade, no parent used to set this up for the child. We were always told, get a job, make money, slog, slog, and keep slogging. Right? We were always given that mandate to keep on slogging. But what has happened is all that our country has found is fixed deposits, and we found invested in gold. That's all we know in the last 30 years. average American invests in the stock market in 1950s or 1960s. That is when Warren Buffett started making all his money. An average Indian 20, 21-year-old is looking at the markets now in 2018, 19, 20. We are 5 or 6 decades behind the equity markets. And I don't blame anyone. We have had a kind of a troubled past. It's very difficult for somebody to have their, motivation to invest when the lack of knowledge. It's only in the last decade when a lot of books started circulating, and you and me, we realized that, wait a minute, this is something which we are ignoring. So now that knowledge has come into markets and equity, we are starting to realize that, wait, let's understand this, let's learn this, let's make money out of this. But that is why the retail participation, when I say retail participation, means layman people, your milkman, or the guy who delivers paper in your house. That kind of participation in the markets has never been in the country. It will happen now. It is starting to happen now. So this is the time when the formalization of our economy is taking place. As an example, I'm just showing you this slide which we took from one book which I recommend to all. It's called Investing. It's written by Mr. Saurabh Mukherjee, who runs a company called Marcus Investment Managers. The credit for this slide goes to this gentleman. He's written a brilliant book, and full credit to him. He's shown us an example of a layman Indian person's balance sheet, personal balance sheet, which means consider Mr. Talwar as an example. He stays somewhere in, okay, wherever, in well-to-do, simple living, high thinking, decent money making guy. Look at his personal balance sheet. When I say balance sheet, his personal assets and his liabilities. Now, what are his assets? He's got 2 houses. You can see the value in the middle column, the assets in the left column, and the remarks in the right hand side, which is given in the book. Now, this is exactly, look at 1, 2, 3, 4, 5. I can understand 6, 7. Look at number 8. That is where we stand. Number 8, stocks, and just have a look at the total value. This has been a problem with all of us in the last 30 years, where we missed out a strong stock market rally for 1990 to 2020. Nobody in the right mind told Mr. Talwar that, hey, you know what, you could have parked your money in the markets and just waited for the markets to grow. All people have done in this country, and I don't blame anyone, again, no offense. What we have done in this country, we have bought houses, we have oversold, we are oversold on real estate. Look at this gentleman. As an example, he has a 2.5 crore flat, house number 1, 1.5 crore house number 2, and loan which he has to pay to the developers is 85 lakh. Gold with him is 60 lakh. His fixed deposits are 25 lakh. And something which had to be 1 crore, which is stocks, is only 5 lakh rupees. Nobody invests maximum money in financial assets in this country so far. And in this book, Coffee Can Investing, a figure that they've given will blow your mind. They've mentioned that if India used to save 100 rupees till 2017, if India saved 100 rupees, only 9 rupees out of that used to come in the financial assets, not even markets, financial assets, which is fixed deposit, insurance, this and that. Out of those 9 rupees, maybe 1 or 2 rupees used to come in the markets. So what I'm trying to say, now people have suddenly woken up due to the pandemic. Ki markets mein you can make money. There's a lot of money to be made. It's a FOMO, fear of missing out, that is catching up amongst the smaller investors. But the markets run in cycles, ladies and gentlemen. They don't run like a straight line. They run in cycles. You can test the patience out of every investor. let me show you again. This slide will explain a lot more. Just give me a minute. Yeah, this is what our growth looks like in the last 35 years. The source of this slide is motiloswal.com. I took it up from one of their presentations. And this gentleman on your screen, he's one of the richest investors in India. You can call him a person who made money just from financial markets. His name is Mr. Ramdev Agarwal. He's joint owner and MD Oswal, the financial company which manages a lot of people's money. So if you can see the number, what is CAGR? Compounded annual growth rate. 14% has been our compounded annual growth rate for the last 35 years, which means, as I said, the money has grown 100 times. On an average, the Indian market from 1985 to 2020 has grown 100 times already. And sir, what do you think is the best growth? Are we done with India's growth, or are we still waiting? If you ask me what the next 35 years look like, my answer based on my analysis and numbers and algorithms would be 90% accuracy. My answer is the next 35 years, guys, you young people like you can see 1000 times growth, not 100 times. You can 10x the growth that we are going to achieve. And there are reasons for that, which I would like to explain you why we should invest, why we should learn the financial markets first and then invest, make a position. Okay, this slide, I'm sure this is a little blurred. Just to show you how our Indian companies are placed, just to give you a heads up. Our economy, or if you look at, when you look at it from the surface, you will be competitive. You know, like every sector, may you'll feel I can do business here, I can do startups here. Great. Bottom, every sector a monopoly or a duopoly, which means one or two companies actually make 90% of the sector. So in paints, Asian Paints and Berger Paints. So if you ask me, sir, which stock should I invest in too much? Your answer, you just need to analyze based on our criteria which company will maximum money. Criteria that we look at, which I'll come to as an example, but in paints it is Berger. In small cars it is Maruti. Hyundai is not even listed in the country. So a clear monopoly of Maruti Suzuki, because you only have Maruti Suzuki available. So if the small car segment grows, Maruti grows. It's as simple as that. Biscuits. This is very interesting. Britannia holds the upper end of the biscuit segment. Parle G or Parle owns the lower end of the consumption segment. So they don't compete with each other, and they are both market leaders. One in the higher end, Britannia, and one in the lower end, which is Parle. Cigarettes, unfortunately, IT is an FMCG company, but 65% of the revenue of ITC comes from tobacco products. 66% to be exact. It's called as Indian Tobacco Company, ITC. And they are trying to change their image. They are trying to become an FMCG player. They're trying to Nestle with all the other company. Matter of fact, Nestle actually has the highest market share in baby milk powder. You know, 96% market share is with Nestle in baby milk powder. So if anytime you feel that can Nestle, then my answer will be in India, till the time babies are going to be born, 96% of the baby products are going to be sold by Nestle for the next 10 years. So this is how we try, and I'm just giving you an idea. This is how we try and understand the business, the core business of the company. You should not. The mistake I see people making all around me is they play on price. This stock is for 20 rupees. I bought it at 20. I sold it at 35. That's not making money. That is doing trading. We are not here to make traders, because traders will never become crore patis. We are here to make investors who make real money. If you're getting a company for like ITC, if you're getting ITC today at 210 rupees is the stock price, if you're getting ITC at such an attractive price, you need to think, learn, understand, watch the annual report. We in our program, in our training program, we teach people what to read in an annual report. An annual report is around 300 pages long. But what does the investor read in it? We actually teach that kind of stuff. How to minimize, or rather how to rationalize the annual report. It speaks a lot and it's available for free on Google. You just need to download. So what we figure out is ITC's share today is 210, 211. Is the company valued fairly or is it undervalued? These are ratios that we need to, there are certain ratios that give us the answer for this. And there are certain apps that give us a clear picture on this. Okay, moving further in Pidilite, in adhesives, you might have heard of a brand called Fevicol, ladies and gentlemen. There is no competitor in the formal economy to Fevicol, and Pidilite is the parent company. So that's why Pidilite is our pick in adhesives. Again, monopoly. In cooking oil and in hair oil, it's Marico. Out of 10 coconuts sold in India, 7 coconuts are bought by Marico. Marico is the same company that makes Parachute hair oil. Can you imagine the kind of monopoly this company has on the products? And the stock is available only for 400 rupees per share. 7 out of 10 coconuts sold in the country are taken by Marico. And Marico ships 5 crore trucks every year filled with Parachute coconut oil all around the world. All around the world. 5 crore trucks, containers filled with oil. So these are, these are insights which will not come out in the media. There is no business media which wants you to make money. They want you to do trading. But what we are learning is how to just invest. As Motilal Oswal's logo says, it's a very interesting logo, and I give credit to them. Buy and sit tight. Just buy the right company and wait for the money plant to grow. You don't need to do too many things. Okay, now I'll show you the meaning of CAGR, compounded annual growth rate. And I'm sure a lot of you are smart people, you know the meaning. I'd like to show you how we calculate. Let's say one of you has 1 lakh rupees and you want to divide it and invest it into a portfolio of 6 companies, and you want to invest approximately 17,000 or 18,000 in 6 companies. But let's say in total you have 1 lakh rupees. And after 15 years, the final value that you are imagining should be at least 50 lakh rupees, right? 1 lakh you have invested today in 2020, and by 2030, you are expecting this 1 lakh to become 50 lakh. So the calculation is in front of you, ladies and gentlemen. You need a company to grow every year at 29.80%, which means the compounded annual growth rate of the company that you invest in should be 29.80% on an average for your target to be met. Okay. Now have a look at the time value of money. I'll keep all the other metrics same. What ideally is, the company should be a very fast growing company. 29% growth rate is very high. Normally in India, you get companies which are growing at 12% every year or 15% every year. And those are great companies, right? 29% is pretty high. Now have a look. I'll make this 15 years to 20 years. Can you see how much the percentage has dropped down? When I made 15 to 20, which means I'm ready to wait for 5 more years, I need a very 21% growth rate for my target to be met. Only 21%. What if I make it 25? I just need a 16% company, which I can find today in India. So the more your time horizon, the more money you will make in the market. That's what I'm trying to say. Because compounding compounding, which is not being taught properly. I'm afraid to say this, but to admit this, I don't think we have been taught the concept of compounding from our schooling the way it should have been taught. Compounding, they say, is the eighth wonder of the world. A very profound statement made by a lot of people claim that it's their statement. So I will just stick to the statement. Eighth wonder of the world is compounding. And how? An example of that, we can actually, do a calculation right in front of us. Yeah. What if I tell you that your 10 lakh rupees invested can be converted into 100 crore in 30 years? Would you believe me, ladies and gentlemen? So I'm putting here 10 lakh and my target is 100 crore, literally 100. How does this happen? It's very simple. You need a company, because we have calculated this. So most of y'all must be aware about it. We need a company to grow at 24% every year for the next 30 years. This is what we need to find out. So if you can find a company that grows CAGR 24% every year, your 10 lakh invested in 2020 can become 100 crore in 2050. And this is not a joke. I'll show it to you. Numbers don't lie. That's my original line, that the numbers will never lie to you. So when we start with 10 lakh. Okay. Okay, let me put it. 10 lakh started in 2020. Right? Year 2020. And the amount being 10 lakh. I'll put it here. Now just keep calculating. I'll just keep pronouncing and you can keep imagining every 3 years what will happen if it doubles. So first 3 years, in short, 24% if you get a growth rate, your money can double every 3 years, right? Please remember this rule. If you get a company that grows every year by 24, ladies and gentlemen, in short, your money is doubling every 3 years. I'll tell you why that happens. So 10 lakh after 3 years becomes 20 lakh. 20 lakh. 20 becomes 40 lakh. 40 becomes 80 lakh. 3 years. 80 becomes 1.6 crore. Then we get 3.2 crore. 3.2 crore. Now, how many years have we crossed till coming to 3.2 crore? We have crossed 15 years. Huh? Now look at the real fun of compounding. The first 15 years has turned your 10 lakh into 3.2 crore. Now look at what the next 15 years, which means 16 to 30 will do. 3.2 becomes 6.4. Then we have 12.8. Then we have almost 25 crore. Then we have 50 crore, double. I'm just doubling it. And in the end, we have 100 crore. 100 crore in 30 years. This is a fact. You can run this on an Excel sheet. You can run this on any algorithm, any of your smart apps. You will get this answer, ladies and gentlemen. If you start with 10 and you let it be invested, my point is, if you don't touch it for 30 years, investors in India who let it be invested for 30 years. That's the whole problem. We start with 10 and we are not here. We have not seen very few people we see who keep working and keep doing their jobs. We hardly come across anyone. But the ones who stay, those 1% or 2% people who allow the money to grow, they actually mint a lot of money because they started early. The point to note here is, the earlier you start this process, the easier it's going to be for you to retire with a lot of money. 25, actually 24 is the right age to start this process. Even if you start with 1 lakh, that's not a problem. You can still save up to 10 crore after 30 years by the same logic. And 10 crore ladies and gentlemen, the value of 10 crore might depreciate because of inflation, but still you are giving yourself a great chance to make a hell lot of money, right? So this rule, we call it the rule of 72. What is the rule of 72 that you just saw? Whenever somebody tells you a percentage, right? Very simple rule. Please remember this. I'll mark it in bold here. Yeah. Whenever somebody tells you that I'm going to give you 9% returns, okay? Fixed deposit, let's say, for example, 9% returns. Yeah, 9% returns. So all you have to do is make sure 72 divided by 9. How much is 72 divided by 9 is 8. So in short, what they are trying to say, your money will double in 8 years. So whenever you get a percentage, make it the denominator, keep 72 as the numerator, and the answer that you get will tell you the number of years that your money can double. Now, this is the entire game that all these big investors play. They invest in companies that gives them a return of 24% every year so that their money doubles every year. 72 by 24 is 3 years. And that's why every 3 years they just watch their money double, double, double. That's the beauty of compounding. That is how money makes money. You don't need to invest more and more money literally to make money. The money can grow on its own because if you allow it to grow, if you let it to be stay invested. Now, if you ask me, which are those companies that can give me 24% every year? That is where the challenge in stocks is. That is what we need to figure out. We need to figure out, so far, we have seen Asian Paints, we have seen Pidilite, HDFC Bank, Titan, Bajaj Finance. All these companies can give you this kind of money. I mean, it's out in the open. They are market leaders. They have proper products and services which can sell. So let me tell you the 3 criteria who will give us this phenomenal growth of 24%. Actually, there are 36 criteria, ladies and gentlemen. But the top 3 criteria that we look for, number 1, we need companies with clean accounting. Clean accounting. We don't need companies which are like, I don't want to take a name over here, but we need their books to be clean. What I mean by that is, you need every money coming in and every money going out to be accountable. It has to be invested back in the company. For example, if ITC makes 100 rupees, their net profit is 38 rupees, ladies and gentlemen. That's the kind of money they make. But what do they do with that 38 rupees? Are they going out and buying IPL teams? Are they going out and buying aircrafts? What is the company doing with that money? That is what matters with clean accounting. Okay. So we need a lot of free cash flow, which is a part of this process. I'll put it here. Free cash flow. Now, this is a deeper concept, so I'll not go too deep into this. What I'm trying to tell you in layman terms is, if ITC makes 38 rupees net profit, which is very high, ITC needs to reinvest that money back in the business every year, year after year after year, rather than doing too much philanthropy. Of course, philanthropy is important. You need to be effective in CSR. Companies are those who reinvest their money back into their own business rather than spending that flashy products or services which they are not going to need anyway. So this is why you need clean accounting. Second point is you need management integrity. Now, this is where the whole challenge is. I don't need to take names of people who have cheated our country and ran away from the country. Even they had companies which were listed on the markets, right? They had listed entities on the market. But eventually, where they went wrong is management integrity was at an all-time low for these companies. So we need clean accounting, we need clean management. And as I said, What are examples of management integrity? I just gave you 6 examples. We have literally dug up their annual reports for the last 6 to 7 years, and we found out that these 6 companies, Asian Paints, Pidilite, HDFC Bank, blah, 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 they pass almost all of our filters. So I'm not recommending them as a stock. It's a disclaimer that you should not take anybody's advice on face value. You should do your own analysis. And to do your own analysis, ladies and gentlemen, you need to understand this process of how to pick a company. What is the third criteria? Clean accounting, management integrity should be positive. The management should be willing. I mean, an example of management integrity is just check if the CEO has been with the company for the last decade or not. Is the CEO changing too often? Is the company changing its management too frequently? That's not a good sign for us to be invested in that company. And what is the third criteria is the company should have products or services which can be sold for the next 20 years. Okay, you should be in a sunrise sector, not in a set sector. What do I mean by that? I'll give you a very simple example. Look at Vodafone. I'll show you the stock price of a company called Vodafone, because we can take examples since these are listed companies. Let me show you on the screen. Vodafone Idea, now they've merged together. So it's called Vodafone Idea. Look at the price, current price of this stock, just 9 rupees. Look at this. Now, some trader, how these people get people to invest in these penny stocks. Vodafone was never a 9 rupee stock. Idea was never a 9 rupee stock. Why did they come to 9 rupees? Because telecom as a sector was completely disrupted by a player called Pure. The moment Jio came into the business, ladies and gentlemen, all these competitors of Jio, they started running high costs and their network started giving us a lot of trouble time. I'm not saying that Jio has the best network, not at all. All these networks are area specific. But if I am an investor, see, please don't get emotional with your investments. That's another tale. If you're an investor and if I'm giving you two options, whenever Geo is not yet listed, but whenever Geo gets listed in the market separately, if I have two options to invest today in Vodafone or in Geo, it is, anybody's guess. Where do you want to put your money? It's a debt-free company, Reliance Jio. Although you might not like the net in telecom space, you cannot afford to invest in company. And I'll show you why. Look at Vodafone's details. In very simple terms, I think you're in profit and loss, right? We need a profit-making company. I mean, for God's sake, we are talking about companies that should make us 24% profit every year. And we have this company. Can you see this net profit here? I'll just highlight it for you. Look at this. It is negative. For the last 4 quarters, you can see the net profit is negative and it is increasing every quarter. I mean, till June 2020, if you see the column from December 2019, March 2020, June 2020. I mean, this was a time of the pandemic when everyone wanted this company to do well. They wanted network to do well, and they are still piling on losses. Whenever the net profit is in negative territory, it's a loss. And this is in crores. In June 2020, continuing from the last few quarters, Vodafone is giving us consistent losses, ladies and gentlemen. June 2018, they gave a profit of 256 crore, I can see here. That's it. Apart from that, every other quarterly report that you find in the annual report, it's a loss-making company. Now, why would you want to take shares of a loss-making company? It is available for 9 rupees. This is exactly the point that we all try and see in companies. We need sunrise companies, not sunset companies. The best example I could give you in the current scenario, Geo is not the biggest, but they've got the money and they've got a solid backing of Reliance, which is the biggest group in the country. Whether we like it or not, we have to be prudent with our investments, right? So either you have two options. You stay away from telecom, because telecom products, whether they will sell or not, we don't know. What's the foreseeable future for telecom? We might have a lot of disruptions, but you are not going to invest your money for sure. I mean, we would not recommend anyone to put their basket of money in a company which is giving you nothing but losses, right? So when we get these loss making companies, we don't even want to go into depth of what they've done. We don't even look at other criteria. Out of 36 criteria, first three criteria gives you whether they are profitable, whether they are loss making. It gives you a filter. It's like sorting filter that gives you that, okay, I don't want to go ahead and invest in this company. Now that I showed you Vodafone, let me also show you Asian Paints, which is, I think, by far the best run company in the country, by far. What they are selling paints. They are not making an iPhone, ladies and gentlemen. They are just making paints. But look at their, now same thing. We are not going to look at other factors because then it goes into a detailed discussion. We are going to look at net profit. Look at this. I'll show you the consistency that we want. Can you see the net profit of Asian Paints for the last 3 years, which is the last 12 quarters? 555 crore, 481 crore, 557, 492, then 636. There is no loss-making quarter at all. Consistently growing net profit. I mean, in the pandemic between March and June, can you see this 218, this figure? They actually suffered a lot of losses in April and May because we were in a lockdown across the country. Nobody was buying paints. Nobody was buying anything for April and May. But the company is so strong in their business, they covered it up. All of it was covered up in June. And for the quarter, the figure stood at 218 crore. They still bounced back in June. And look at the last quarter between June to September. They've had an all-time high 30 crore in the last quarter. All-time high. People have just gone crazy and they've redecorated their houses. They've bought out stuff. They've spent no tomorrow. Because the psychology is when you're sitting at home on the lockdown, you tend to think more about is outdated, my furniture is outdated, my television is outdated. And when the unlock happened, people started buying stuff. Now look at all of that is visible. All of this is visible in the stock price. Just have a look at the stock price for the last 3 months. Actually, I'll show you a stock price in a better screen. In a Google screen, I'll show you Asian Paints stock price, share price. This is just an example again. Yeah. Now here, if you see last post Diwali, post the festive season, just have a look at this. 19% growth rate just in a month between 20th November to 18th December. And this is not even a junk company. It's Asia's third largest paint company, India's largest paint company, and probably the top 10 paint companies in the world right now we are talking about. It's not even a junk company. It's a profit-making money machine. We call Asian Paints like a money machine because we have analyzed their reports for the last 5 to 7 years. And if any company can give you this kind of growth, if you remember in my session beginning, I was talking about 24% growth every year. And Asian Paints is giving me 19% in the last month. If I look at 6 months, last 6 months, look at this, 57%. I need only 24. And this company is outperforming my metrics. So this is why it's important for us portfolio. You need a portfolio of companies which can give you consistent returns. If you look at Asian Paints last year to this year, like, okay, I'll just do it for 1 year. If you look at 1 year, 20th December 2019 to 18th December 2020. if we compare apples to apples, ladies and gentlemen, in spite of the coronavirus pandemic, in spite of the drop in share prices in March, April, May, June, the company still, last point, if you can see, it has still given you 44% returns, which is double of what you need. That's why these are examples of great companies. These are great companies. Warren Buffett tells us you divide companies into three types: great and gruesome. And one example that I showed you earlier is example of a gruesome company. We need to be aware which are the gruesome companies in India and which are the money making machines. That is what we teach, and that is the logic behind making money. Okay, now just let me show you a portfolio, an example of a stock portfolio. Yeah, please have a look. Right. Um, just if you could just give me a minute, I'll have some water. Akanksha, just 30 seconds. I'm just having some water, please.
Okay,
Meanwhile,
sir.
you can
Okay,
have
sir.
a look at the portfolio. Yeah. Okay. Thank you. Now this portfolio comprises of so many companies, right? There are around, if you can see, there are 12 to 13 or 15 companies. I think also this example, ladies and gentlemen, this example is also taken from the book Coffee Can Investing, right? I give full credit to them. What they've done, they've shown us a portfolio of money making machines. Now, I'm not giving you a recommendation that tomorrow you should open a demat account and buy these companies. No, no, no. Let's be very clear. Let's have a disclaimer. This is a portfolio which made money, as you can see on the top of your screen. Till 2017, this was a good portfolio. It had Lupin, it had LIC Housing Finance, it had Page Industries. All these companies are market leaders. They have good market cap and they have clean accounting and all of this. I'm just trying to show you how we help investors make portfolio of 10 to 12 companies. Actually, if you ask me personally, you don't need more than 12 companies in your portfolio. It should be like a football team or a cricket team. It should be that good. One of these companies will hit the ball out of the park. One of these or two of these will outperform in the next 30 years. All of them make money for you, but not multiply money for you. 3 out of 12 will multiply the money for you. And in this case, Page Industries has done it. Astral Poly and Dr. Lal Pathlabs, the third last and the fourth last on this list, they are actually on their way to doing it. I mean, we take them very seriously. They are market leaders. You know what this company does? Dr. Lal Pathlabs, you might have not heard about it again. They are the market leaders in those utensils or test tubes. Like whenever you do not only a COVID, any kind of diagnostics done in the country goes to Dr. Lal Pathlabs. There is no competitor. It's a monopoly business for them. So you need to figure out these kind of monopolies. That these monopolies make money, you also make money because you are a shareholder. Fundamental difference, ladies and gentlemen, in thinking like a shareholder is you need to think like you are going to own this company, own a part of this company. You are the owner. You think like an owner. Only then you can become a long-term investor. Not like a trader. I took it for 25, I sold it for 40. That's the language of traders in this country. There's no harm in trading, but trading is like addiction. It is not good for health. It can give you profit one day. It's not going to give you profits every day. What we are trying to teach is value investing. That's what Warren Buffett, we all grew up studying Warren Buffett's books. It's called value investing. You buy a stock, stick with it for 30 years, and by all means, if you have the patience, you will in good companies. Now, point number 5 on this slide, as you can see, Ramdev Agarwal ji is explaining the slide. You don't need to go into the graph. You just need to look at that one line which is given in red color. If you see that one line, when you're running the country, like when you're running India, the government which is elected in the center, the government can do everything. They can change policies, they can change procedures, they can get new farm laws, they can give boost to the employment. They are doing a lot, and they can do a lot. There is which any country's government cannot do. And that one thing was printing dollars, foreign exchange reserves. For any country to grow, you need a good chunk of forex reserves. And you know what? Luckily for our country, all our parameters in the favor of this country's growth, ladies and gentlemen. Our forex reserves line have risen 500 times. We were only $1 billion in 1991. Actually, this figure has been revised now till December 19th. India is sitting on foreign exchange reserves of $600 billion. It's gone beyond 500. We have so much of foreign inflow coming into this country. People are investing in this country. What that means for people like you and me who are investors, all our stock markets are going to go up in the future because the foreigners don't have these kind of money making machines. They are done with the Apples and the Amazons and the Googles of the world. These companies have already grown. These companies have reached their saturation point. Of course, they will keep growing every year, but these companies are not going to grow 24% every year. This hunger for growth can only be found in countries like India, Vietnam, maybe Thailand, Australia, Indonesia, and on this side of the world. You can find this hunger on this side of the world. That's why what I was trying to say by this slide is we have enough reserves to cover the country for growth. We are not here to challenge our country, or we are not here to make statements on policies. We just need to invest in a company because, as you earlier slide, a good company remains a good company. Whoever comes, you don't need to worry who is in the government, who's running the country, what's going on. A good company makes money irrespective of the times because India grows at night, as you saw in the slide. Please remember this fundamental principle of investing that I already spoke to you. I'm just giving you a kind of, we always overvalue and overestimate the impact of things we can remember, and undervalue and underestimate the prevalence of events we hear nothing about. It's called as, this concept is the availability heuristic. I'm pretty sure anyone listening to this session or sparing your 3 hour session, I'm pretty sure you might have never heard that Asian Paints has given you 8% returns, because it's something which is good, and the good often doesn't come out in the media, right? So what we hear is covered in that yellow spot that you can see, covered in the news. What we don't know is the problem that investors need to figure out. Have a look at this slide. Yeah. We have 4 kind of, now this is a behavioral psychology point, behavioral science. It's important to just understand this point. We have a known that I know it all. This complacency sets in the first quadrant. In quadrant, you have a known unknown. You are aware that you don't know something, but you don't care about it. It's a known unknown. Unknown known means somebody else comes and tells you, hey, you are good at investing, you have this talent, why don't you work on it, right? And you say, oh, well, wait a minute, I never thought about it like that. So that's an unknown known. Other people know it, you don't know it. And the fourth one, this is the most dangerous and unprecedented. We need to stay away from that, or we need to safeguard from that. This is what the COVID-19 pandemic taught us. It was an unknown unknown, unprecedented. Nobody knew what it is. Nobody knew when the vaccine will be out. Nobody knew how much damage it will do to society, to countries. I mean, if you remember, during the month of April and May, we were thinking of survival. People are talking about whether the humanity will survive or not. So that is where, if you divide your company analysis into these four quadrants, it's a very important behavioral finance metric. You should know what you know about the company. You should be aware know something about the company. You should go as deep into your analysis as possible. You're supposed to match the company. That's how deep these investors get into the analysis. They go as deep as they feel that someday, if I'm an investor in this company, what if I'm looking to marry this company? What all would I have to find out about this company? The analysis should be as deep as a lifelong partnership. Only then we get these money making big companies, right? Uh, just a few more pointers I would like to show you. We have quite a lot of time, so let me just show you the latest figures. Yeah, there is one more metric that we see. In fact, I can show it to you on the app, right, that we teach people. First, let me show you Pidilite as an example. Let us have a look at Pidilite. Pidilite is the company that makes Fevicol. Look at its growth rate since inception. Yeah. Have a look at this graph. This is Pidilite since it got listed. 1st of Jan 1999, it was at 6 rupees per share, right? Anyone who parked his money here, somewhere here, and today, just have a look at the growth. 27 November, I'm catching as a benchmark. It's 24. What has Pidilite done so great? Nothing. They've just made 3 products which continuously keep selling in the Indian markets. What are those 2-3 products? Dr. Fix-It, M-Seal, and other variants of these 3-4 products. Waterproofing solutions, solutions that build your home. That is all that they have sold. They have not gone out and made Samsung Galaxy tablets or iPhones, but they've made similar amount of money in India just by selling basic essential products, right? So in India, if you have to make money, the money is in sunrise sectors, which are finance companies, NBFC companies. Let me show you, having spoken about NBFC, what is an NBFC? Non-banking finance company. The best play in this is Bajaj Finance. Bajaj Finance Company, or Bajaj Finserv, which is the parent company. If we look at Bajaj Finserv, one share is available for 9,200 rupees. And look how much money they have made for the investors. They are still on the growth path. By the way, it's still growing. It is not given you like 50,000%. So this is a company which can give you that money in future because it's still growing. Don't look at the price. The price is only an indication of past growth. You have to find out the underlying value. Is this company valuable at 9,000, or is some company valuable at 210 rupees, which is ITC? If I have to take a pick between the two, I will not look at price. Please understand, because price will keep adjusting all through the next 30 years. The company will give out bonus shares, they will give out dividends, they will give out stock splits. So the price, keeps adjusting proportionally. The value is what we need to find out. Intrinsic value. How do we find out the value? That takes effort and that actually takes time. That is what finance is ideal for, right? We need to find the core value. How much is ITC worth? Indian Tobacco Company growing into FMCG. How much is it worth going to be in future? Can it reach 20,000? Can it multiply money 100 times? That is what we need to find out. Okay, I think we have had a lot of Gyan continuously, so I'm feeling like a monotonous speaker who's just continuously speaking to you all and trying to make sense of the session. So what I suggest is, can we throw the session open for some question answer? I'd also like to, it'll be good to interact with our audience.
Yes, sir. There are a few questions from our audience which I would like to read out one by one.
Sure.
So the
Sure.
first one is
Sure.
how to start investing
Mhm.
as a beginner.
Okay. So yeah, okay, just a minute. Do you need my video screen to be on, Akanksha, or should we
It is
look
not
at?
necessary, sir.
Okay, okay, fair enough, fair enough. So your first question is how to start, right? Can you please repeat the question one more time, please?
How to start investing as a beginner.
Okay. Okay. Uh, so see, the first point is when you want to start this process, you're already, that means you already are serious about making money. So well begun is half done, as they say, start by small quantities. You should not have everything into stocks. If you have, let's say there is a rule which we say 100 minus your age. I repeat, 100 minus your age, that much percentage of your total investment should be in equity markets. So if you are 25-year-old person, 100 minus 25 is 75. 75% of your investment to begin with should be in stocks and mutual funds combined, because that is where the money is going to be made. And you are young, so you can take more risks at this age. As your age keeps growing from 25 to 30 to 40 to 50, your allocation to stocks will keep coming down because you will keep making money over there. So once you reach 50, 100 minus 50, again 50% of your portfolio should be in stocks. So a good way to start is figure out a balance between real estate, between gold, between fixed deposits and stocks. 75% of the money being in stocks. What about the other 25? The other 25 you can divide, like 5% can be in gold, maybe 12% can be in your property, and the remaining 8% can be in fixed deposits. What we have done so far is the reverse. We have put 75 to 90% FDs and gold and property, and we have just left 5% for the stocks. That's why I said in the beginning there's a lot of financial illiteracy in this country, and we are coming out of it. We are coming out fast from it. We have realized. I'll give you a very small example here. Again, um, a house bought out, let's say like Mumbai, in a prime location in a financial capital, Mumbai. You bought a house at 2010. The house was available for 2 crore, 2 crore, right? And you thought that, wow, this is my best investment. Let me take a loan. You took a big loan. Till today, the loan is for 20 years. Any housing loan that you take is normally for 20 years. You know what? In the last 10 years, the value of that house is still 2 crore. It's not grown in the city. If you would have invested that 2 crore anywhere else, even at 12% per annum, the money would have become 5 crore by 2020. But you invested in property, you took a lot of loan, you thought that this property can be put out on rent, but the rent is not going to make your 2 crore into 6 crore. That's the whole point I'm trying to make. Today, when people look back, they are working hard. They are paying 1 lakh plus EMI just to pay off that 2 crore of loan, which is going to stick with them for the next 10 years also. And they will see that the value of property is going down, or let's say not going down, it's not going up for sure. None of the properties in Bombay, unless it's a small ticket size, it's a very small ticket size like 15, 20 lakh, might have become 30 lakh, 40 lakh. But none of the 3 crore, 4 crore, 6 crore properties have doubled even in 10 years, which means it's poorer than an FD. An FD, fixed deposit, normally doubles in 9 years. Your property investment is much, much poorer than even an FD. Why has this happened, ladies and gentlemen? Because in real estate, we are living in a world of oversupply. We have oversupply and options to the customer. The customers are preferring to rent out a property rather than buy it. That's the reality. And that's why nobody is, ask any of the young job earners today who are 35, 40, ask them if you would like to take a loan of 1 crore and take a big flat. Are they prepared to pay an EMI of 1 lakh per month? Can they afford an EMI of 1 lakh per month, knowing very well that the value of the property is not going up? This is the difference between investments. You cannot take property as an investment today because it's not happening. Most of the first world countries, nobody invested in America in property because they always invested in financial markets. Because for America, property never gave them money. It was just a means of having a house. The world's richest investor, Warren Buffett, stays in the house that he bought in 1958. The value of his house has only doubled in the last 60 years. And he's still staying in that house, but he's consuming that house, and it's taken him 60 years to double that value. Property, gold, even though gold has grown during the pandemic, these are just options that you need to use to hedge your money. They are not going to give you returns. So when you ask me, how do I start? Start by taking small investments in good companies and growing your portfolio as you grow further with your age. Yes, Akanksha. Next question.
Yes, sir. So the next question is, what are the fundamentals to look into before purchasing a stock?
Okay, just a minute. I'm just having some water again. I just need water in between. Just a minute.
Okay, sir. Sure.
Okay. Yeah. Fundamental. That's actually a good question. I appreciate your viewers and their questions a lot. Fundamentals, as I said, I think I've already explained that answer. 3 points. You need companies with clean accounts, good management integrity. Like, for example, Titan. I can give an example here. Titan consists of the same group of people for the last decade that are running the business. And all the growth that has come in Titan has come maximum in the last 10 to 15 years, right? So clean accounting, good management integrity, and third, is Titan gonna sell you products and services which will last you for the next 15, 20 years? The answer is yes. So the third fundamental that we look at is the company selling a product or a service which will be in the market or out of the market? I cannot say that for Vodafone. I can say that with complete assurance for Titan, for Asian Paints, for Pidilite, for NBFCs and banks, because we know whether you go digital or physical, you need a bank. And when you need a bank, you need the largest one to survive. HDFC is the largest private sector bank. They will survive, come what may. So that's why our filters, that once you go through the total list of filters, it's not very difficult to pick companies in this country. There are only 12 to 15 companies that will make you money. Out of 5,000 companies, only 12 to 15 are going to make you money. It's very simple if you figure out these three answers. Yes, Akanksha.
Yes, sir. So the next question is, which is a better investment, cryptocurrency or stock?
Oh yes, this is a very interesting question again. I think I did not cover crypto in my presentation, but I'll cover it now. You don't need to compare cryptos and stocks. Crypto can be a part of portfolio, should be a part of portfolio, definitely. But what is a cryptocurrency? It's nothing but a digital payment system. When you buy cryptocurrency like Bitcoin or Ripple or anything like that, like when I buy a property, I get a house. When I buy gold, I get physical gold or digital gold. But when you buy cryptocurrency, you just get an email and you get some software message that, okay, so many points of cryptocurrency are loaded in your digital wallet. So it is a good investment for sure. But if you ask me personally, with my personal disclaimer, I would like to say anyone looking to get into the world of cryptocurrencies, don't compare it with stocks. Because when you buy a stock, it's there in your portfolio. It can multiply itself because the company is going to issue bonus shares. They will give you dividends. What are dividends? The company gives out annual payments to its shareholders because you are a shareholder. I'll give you a very simple example on this question. So one of my family member had 50, not even too much, 50 shares of Titan, and they got an email in their inbox during the pandemic, August. You know what they got? To all shareholders of Titan, they sent an email that wherever in India you shop for Titan products, consumer products like, Titan has Tanishq and it has Zoop and it has that perfume called Skin, Skin. They have a lot of products, more than watches. They have other products also. So they had given a discount offer for all the shareholders of Titan. Wherever you are placed in India, you can show that email and you get a flat 15% off on whatever you buy in the world of Titan. Who got this offer? Whoever had shares of Titan. This is not going to happen in real estate. This will not happen in gold. This will not happen in fixed deposit. This will sure not happen in cryptocurrencies. So understand, when you're comparing stocks actually pay you a lot without doing much. They pay you fringe benefits, which other things do not do. So crypto is a good investment. But before you get into the world of cryptos, by the way, in my training program, we also cover cryptocurrencies. We also suggest which are the best ones. So today, if you're asking me, I can just take a name of Ripple, RIPPLE. Ripple XRP looks to be a very interesting cryptocurrency, and we feel as a group, me and my team, with full responsibility that in the coming future, if any cryptocurrency has to grow, it sure as hell would not be Bitcoin. I think it will be Ripple. Ripple can grow better from here. But my standard disclaimer is, before you invest even 1 rupee in any of this, please take financial advice. You can contact any of your financial advisors. You can reach out. Probably I can help you, whatever. But please do take advice from some learned person before you take this plunge. Don't go by scuttlebutt. Please, I request you with folded hands, don't trust that neighboring auntie that stays in your building, who always has an opinion on stocks कि ये वाला stock अच्छा है, वो वाला currency अच्छा है. Please don't do that. Your money is too hard to be wasted on something like this. If you're not sure, don't invest. Unless you are sure, learn the process. Learn this art of investing. It's an art. It's a scientifically proven technique, and it's an art to invest and pick out these multi-baggers. Yes, Akansha.
So the next question is, if we are equally proportionate to earn profit, like if we are the shareholders of a company, then what if the company goes into heavy loss or debt? Are we liable to pay for the company's debt?
Yeah, I think I lost your voice in the end, Akanksha. Are we liable to? Just continue. Are we
Are,
liable
are
to?
we liable? Are we liable to pay for the company's debt?
No, no. A very clear answer is, for example, Vodafone. I'll take the same example which I explained all of you. Vodafone is deep into losses and debt. None of their shareholders will be liable. I mean, see, unless somebody owns like 25% shares of a company, which is very high, those guys might have a different deal on the table. But for a small investor like you and me, we don't pay it from our pocket. Yeah, just a minute. Am I audible, Akanksha? Just checking with you.
Yes, sir, you are. You are audible.
Yeah, yeah. So I was saying that unless somebody owns 25% or maybe 10% of a company, if you are a major shareholder, like somebody like Rakesh Junjunwala, for example, who owns a lot of shares, those guys might have a different deal. They might have to be answerable. But for small investors like you and me, we don't pay it from our pocket. We have the share. We just need to deal with the share price, whether it goes up or comes down. That's what we need to deal with. Yeah. Yes, Akanksha.
So the next question is, what is the difference between a money market and a stock market?
Great. Interesting. So, money markets are those short-term lendings and borrowings which the government does quite often. You can call it debt market. Let's say HDFC Bank has to take money from the RBI, or there is a lot of interbank borrowing and sharing of money that happens. So, like Government of India bonds, the Government of India issues treasury bonds and a lot of other bonds. A bond is something where I invest 1,000 rupees and they guarantee that you will get 6% rate of return at the end of the year, something like a fixed deposit. So a lot of such short-term, 1 day, 1 month, 3 months, 6 month, 1 year schemes are running in the money market, which is the debt market. HDFC Bank can borrow money from RBI at a rate of 4% per annum. But that money they will give out to a loan at the rate of 9% per annum. So HDFC Bank makes a neat 5% difference on that money. So this is what banking is. This is how banks and finance companies make money. Borrow at less and lend at double. Borrow at one, lend at two, something like that. This is the formula for banks. And stock market, as you know, is we spoke about it, right? All about stocks and investments. So that's the core difference between the two. Yes, Akanksha.
So, sir, the next question is, can we trade without a demat account?
You cannot. You need a demat account for trading. You cannot trade without a demat account in stocks, right? This question is for stocks, right?
Yes, sir.
Yeah, we need a basic demat account, which can be opened with companies like Motilal Oswal or Sher Khan or Angel Broking, these kind of companies. Yes, Akanksha.
So the next question is, what method would you recommend as a getaway to someone trying to test the waters of stock market investment?
I'm sorry, I heard your question, but could you repeat, please? Interesting question. Please repeat.
What method would you recommend as a getaway to someone trying to test the waters of stock market investments?
Okay, as a gateway to someone who, yeah, method I would recommend is just download the last 5 years annual reports, um, of any company that you want to read. Go through it. If you have doubts, please ask the legit people and the learned people around you. That is how we learn. Everyone needs to start reading those annual reports. which nobody reads. They are just a Google download away. I mean, if you search Titan annual report 2020, you'll get the latest annual report for the company. So our way of investing is no different than what Warren Buffett did. Warren Buffett today owns $135 billion in wealth. $1 billion is 7,500 crore rupees. Warren Buffett has $135 billion in his wealth. He's the third richest man in the world and the richest investor in the world. But can I tell you a fun fact? His age is 90. He started investing when he was 11 years old, and he became a millionaire when he was 31. Between 31 to 90, what Warren Buffett has done, he's stood invested for the last 60 years. He did not sell. He allowed his investments to grow, and he only booked profits in companies where he wanted to book profit and run out of them. But he kept on holding on to his stocks for 60 years, 6 decades. That's how he became the richest, third richest guy. And whenever we talk about the richest people, we don't understand the average age of a billionaire, a self-made billionaire, age is 63, ladies and gentlemen, in the world. Unless you are born in a rich family, that's a different ball game. But if you want to be a self-made billionaire, it's possible. But the average age for that is 63 because it takes time for the money to grow. Whatever business you do, whatever way you invest, we recommend the Warren Buffett way of investing, which is look for fundamentals. Look for fundamentally high growth companies and stay invested. The more you are invested, the more money you will make. Yes, Akanksha.
So this is the last question.
Okay.
So as you said, if we invest 1 lakh today and get 10 crores after 10 years, but the
Not
real
10 years.
profit,
Sorry. 30 years. 30 years. Please don't
okay, 30,
misquote me. Yeah,
yeah,
1
30
lakh will
years.
become 10 crore. It'll take you 30 years. Correct. Yeah, it's possible.
Okay. So, but the real profit will be what the 10 crore is worth today, the value of 10 crore today. So, is there a
After
way to
30
find
years. Yeah.
exact, yeah, after 30 years? So, is there a way to find exact profit?
That's a very good question. I appreciate. I mean, that's a very interesting question. Yes, there is a way to find that. I think what you're trying to ask me is what will be the value of 10 crore after 30 years? Is that what you're trying to ask me?
Yes, yes.
After 30 years, what will be the current value of that 10 crore? Right?
Yes, what will be the current value of that 10 crore now?
Sure. So I can tell you the way to do it is you have to assume inflation, rate of inflation. What we do, we assume that inflation will be around, let's take it on the higher side. What is inflation? It's the rate that we have all studied this basically. It's the rate of how expensive something is going to be next year. So if today the inflation rate is 6%, something that you buy today at 100 rupees is going to be at 106 rupees in 2021, next year, December. So what we do for this calculation, that's a very interesting question. Take average inflation rate to be 6% and multiply that, calculate that with the formula that we have for 30 years. So if you do the math, the value of 10 crore after 30 years as per this inflation into account will be around 3.3 crore today. At least around 3.3 crore of today. Whatever you can do with 3.5 crore today. Yeah. Yeah. Could you hear my answer? Was I audible for my answer?
Yes, sir.
Yeah. So it works out to 3.5, 3 crore today, 10 crore. That's an inflation calculation that we do. Yes, Akansha.
So, sir,
So
there are
this was the
more,
last question.
no. There are
Tell me.
few more questions. Once again, I'll
Please,
read them
please,
out.
please tell me.
Yeah.
Please,
So,
please.
how to invest in foreign companies?
Wow, I must appreciate. I think your audience is highly intrigued and highly knowledgeable. This isn't, again, I mean, I normally don't get such insightful questions. I must appreciate. So good. So foreign companies, I'm assuming somebody is asking how to invest in Amazon, Google, Facebook, and all of that, right? So yeah, the way to do it is there are mutual funds. Like in India, there is a mutual fund called, with disclaimer, I'm taking a name as an example, not suggesting the fund, but there are mutual funds which invest a chunk of money in these foreign companies. An example of that fund is Parag Parikh Long Term Equity Fund. Parag Parikh Long Term Equity Fund. What's a mutual fund? It collects money from a lot of small investors, and there is a fund manager who manages your money. So they invest in a portfolio of stocks. Can I share my screen and show you this answer in a better manner?
Yes, sir.
I
Yes,
can
sir.
explain my screen again.
Yes, sir.
Yeah, thank you. After this answer, I'll come back to answer. Yeah. So let me show you with an example, because when you show with examples, it kind of sticks better. So this is the fund. Now I'll just show you how to find out how to check funds. Basic. If you go to moneycontrol.com and type any mutual fund, this is the way to invest your money in foreign companies. Go to the mutual fund, click on portfolio. Always click on portfolio here. I click on portfolio and it will show me uh, which companies is this mutual fund investing in. So as you can see, if you look at the top 10, so the fund does nothing rocket science. It takes your money and invests the same in companies. But Parag Parikh, this fund invests your money in American top companies in the world. Like if you can see Alphabet, the parent company of Google, which is Google. Alphabet Inc. is Google. So if you invest your money into Parag Parikh, your money is going to be invested in Google. You can see Amazon. You can see Facebook right at the bottom. This is a way of investing in foreign companies. Mutual fund that will take your money and invest it into foreign companies. There's one more fund. Let me show you. Motilal Oswal. There is a fund by this name. Just a minute. Yeah, so I think it will take time to, yeah. What I was trying to say, you have to figure, I mean, of course, this process of figuring out which fund to invest can take you around 1 month or even more than a month, right? Because you'll have to do a lot of analysis. But yeah, I've stopped sharing my screen. You can come back to your screen, please. This was just an example to show. We need to figure out a mutual fund which can take your money and invest in those foreign companies. And by the way, this Parag Parikh mutual fund has given us phenomenal returns. It is actually giving 24% annual returns every year since the last 7 years, consistently giving returns because all of their money is going into the top companies. So let me give you another insight on this question. This is an excellent question. So let me tell you, top 5 companies in the world today, top 5 are Amazon, Google, Facebook, Microsoft, and Apple. Of course, you can't miss out Apple from this list. Apple, Amazon, Google, Facebook, and Microsoft. These top 5 companies have so much wealth in them. They are actually running the entire ecosystem of the world. Can you imagine your life without any of these 5 companies every day? You can't. You can't imagine your life without a Facebook. Okay, if you're not on Facebook, without a part of Facebook, Instagram company is a part of Facebook. Imagine what your life would look like if it was not for Google, for Facebook, for Microsoft, which is Microsoft Word, Excel, PowerPoint, and all of it, for God's sake. And Apple, of course, you can call it a discretionary product. Some people will buy it, some will not. Without the other four, all of us have no life. It's become a part of our life. 60% of your life and my life is run by these four companies. Now, what does this tell you? That they are going to grow consistently for the next 10 to 20 years because they are market leaders. There is no competitor to Google. There's no likely competitor to Facebook. Of course, there are competitors to Amazon, but look at Amazon is far, far, far ahead of the nearest competitor also, right? So these are people who are running your brain and my brain. We are forced to kind of absorb their content because we don't have a choice. You cannot have your own Facebook or Insta or anything. You have to depend on them. And that's why they are going to make money for investors. Yes, Akanksha. I hope I was able to answer the question.
Yes, sir. So the next question is, what is better for beginners, mutual funds or stock market?
Okay, good question again. I think it has to be a balance. Yeah, you can't depend on any one. You have to space it out. Like I think 70% of your, so let's say stock markets and mutual fund makes 100%. Agar aap 100 rupees, if you're keeping aside for stocks and funds, out of those 100, I think 75 should go in stocks and 25% should go in mutual funds. That should be your ideal ratio. Yes, Akanksha.
So the next question is, what is the difference between an equity portfolio and demat allocation?
I'm sorry, equity portfolio and
Demat allocation.
DMAT DMAT allocation. I'm not sure whether I'm getting what he's trying to ask. Maybe they've not framed it. DMAT allocation. I'm not. Does he mean portfolio allocation or? So an equity portfolio is nothing but your, I showed you an example of 12 stocks, which this gentleman had. That's an equity portfolio. You have a portfolio of those 12 companies. You are a shareholder in these 12 companies. I'm not sure what the person is trying to ask for demat allocation. I'm not quite sure. Yes, Akanksha.
Yes. So this is the last question.
Sure.
Suggest some long-term stocks to invest.
Yeah, I've already given you all 6 of them very clearly, and I think we are very bullish. By the way, I also am a financial consultant to many people. I keep tracking their portfolios, as in, I keep giving this financial advice on a professional level also. So, a lot of people depend on my advice. I also have a WhatsApp group for this called the Profit Curve, which is our YouTube channel. We keep giving out free advice. In fact, if you goes to our YouTube channel, you'll see that a lot of videos are made on this. And my motive is financial literacy in this country, especially for the young people. That's my drive and passion. So if you're asking me, suggest long-term stocks, there are only 15 of them that can make money for you. I've already given you 6. So I'll repeat those for the person who asked this question. I'll repeat in general for all of you all. If you really want to make money grow, the criteria is look for monopoly businesses. In India, if you look for monopoly businesses, Asian Paints, Bajaj Finance, they also have a parent company called Bajaj FinServe. So you can depend on both of them. So Asian Paints, Bajaj Finance, Bajaj FinServe, Pidilite, HDFC Bank. They also have a life insurance company which is growing phenomenally well. So HDFC Life Insurance and HDFC Bank. You know what we call this H2B2. H2B2 is HDFC Life and Bank and Bajaj Finance and Finserv. So 4 stocks तो यहाँ पे ही हो गए. H2B2 plus Asian Paints plus Pidilite and Titan. If you want to add a contra bet into consumption play, Titan is going to be the market leader for the next decade. Because why we are so bullish on these companies? Each of these has proven track record for the last 2 years. They have grown money consistently. Actually, the word is consistency. They have batted like what Rahul Dravid used to bat in test matches. Today, you saw how our team gave up in the test match, right? Because they don't have, they have, but they don't have a person who can stick their neck out and fight. All these companies have fought turbulent times in India. And now they've started to see that they have become market leaders. So today, all of India's setup is pushing these companies to grow faster because they've had their bad times. The bad times are behind them. So in every sector, we try and figure out who is going to be the market leader. So I've just told you these names. They are clear market leaders. You can definitely make a portfolio of these 6 companies. I'm sure they will not let your money go down. They will only give you returns. But okay, I have a standard disclaimer that before you invest even a rupee into any stock, please, in the name of good Lord, please analyze that company. Make sure you understand the business. I understand the business of paints. I understand how banking works. We have run our life understanding how insurance works. Okay, so we are very confident because we understand how companies making money. For an investor to understand this, you need to read the reports. Once you start understanding that, hey, this company is giving me so much money, why don't I invest in it? That is when you will get the self-confidence to invest in these money-making machines. For example, very quickly, insurance. Now, guys, insurance is such a lucrative business. There is no better business in this world than insurance. Trust me on this. There is no better business in the world than insurance. It is better than banking also. Why? What are you selling when you're selling insurance? What is the company selling to you? They are selling you death. They are selling you death. That they are telling you, boss, you have come in this world. You are definitely going to go someday. Someday you have come not by your choice. You're going to go again not by your choice. So what you can do while you are living in this world, why not cover your family and buy insurance so that whenever you go, earlier or later, your family is covered. So it's like they are selling you the reality of life, which is the hard reality of life, that life is very fragile, right? Now, once a customer converts to a company, starts paying premium, insurance premium, you can't stop it. You have to pay it for the next 30 years till your lifetime, right? So what does that mean? When you convert a customer, you are guaranteed revenue from that one customer for the next 30 years. No other business in the world gives you that guaranteed cash flow, income, free cash flow. This is one part of the story. Secondly, 100 people pay insurance premiums in India, only 15 of them come to claim it. What I mean is, our mortality rate luckily is so low that if 100 people are paying insurance in this country, they are going to need it because they have had fatalities, they have had people who have died. So only those 15 are going to come and claim it. What about the other 80, 85? What about that money? That money is just lying in the insurance company's bank account and it is growing, right? They don't need to give it to anyone. So that is why insurance is a money multiplier and why we are recommending HDFC Life Insurance, because I have seen how this company functions. LIC, they are the next beneficiary in insurance. And in India, we are still, as a country, we are still underinsured. 76%, actually 75% of India still does not have basic health insurance policy, insurance. So the market is going to only grow from here. Who will benefit the most? Number one and number two. LIC is not yet listed on the stock markets. So who is the biggest beneficiary? HDFC Life Insurance. Why? because they are the next biggest player after LIC. And since LIC is not yet listed, HDFC gains. All the gains go to this company. So that is how, guys, your logic, your analysis, and your portfolio, it is built around logic and clear filters. Yes, Akanksha.
Sir, there is another question coming up. I hope this is the last one.
Okay.
Huh.
No
So
problem,
the,
no problem. We can
yeah.
take questions here.
So the question is becoming a stock analyst a good career option?
Mm-hmm. Okay, now that is very subjective actually. So it's not like becoming a doctor or an engineer or something like that. I mean, stock analysts, we call them equity analysts, and we call them derivative, yeah, commodity analysts. You have a lot of good options there for sure in equity analysis. But you need to ask yourself, do you love numbers? Do you love playing with mathematics or statistics? If you're good with company analysis, like we have been discussing in this session, if that is your passion, I mean, if your passion is to see ki how much did Nestle make last quarter, how much did Maruti, how cars did Maruti sell last quarter, will the stock price go up or go down? If this is your passion, then yes, the stock market analyst is definitely going to pay you well. It's a passionate job. To whoever is asking the question, Akanksha, it's a passionate job. This is not a 9 to 5 job. You cannot do it like, हाँ ठीक है आज 8 घंटा काम करना है. I'll go to office, I'll check some company and come back. No, you need to be passionate about it. It's a very involving job, because today when I saw that Nestle has 96% market share, I was like, okay, which is the product? Is it Maggie? No. Is it some chocolate that they have? Kit Kat? No. They have market share, but 96% monopoly is only in Cerelac, in those baby milk powders. And that is when I realized, my God, this company's stock price is 18,000 rupees per share, Nestle India. Why the hell did the company grow so much in the last 20 years? Because India has produced so many babies, and we are going to do that. And the baby is going to need milk powder for the first 5-6 years. It's a simple, clear business model that we need to understand why Nestle will keep growing from here also. So if this is what is your passion, to understand companies like stories, if you can understand a company like a film story, then this career definitely rewards. Yes, Akanksha.
Yes, sir. We are done with the questions. Thank you so
Okay,
much, sir, for the
great.
amazing session. I'm sure the audience has so much to take back with them from the session. I will now request all the participants to kindly answer the quiz using the link. Successful submission will receive certificate of participation post the event. Fill in the details as required for your certificate. Do check out our social media handles. Follow us on Instagram, Twitter, Facebook, and LinkedIn for regular updates of events, initiatives, and scholarships. Even though don't have any openings currently, we are always interested in expanding our family. Do put in a word regarding your interests and specialties so we can contact you in case of any openings. Looking forward to having you join our team. Thank you. On behalf of GirlScript Goa, I would like to thank our speaker, Mr. Samir Karna, once again for taking out his precious time and helping us gain immense knowledge about stock market. It was an honor having you with us, sir. A huge
Thank,
thanks to our amazing participants for staying with us till the end. Hope to see you all at our future events.
Thank you so much. It's a pleasure interacting with all of you. And literally, I was very happy with the flow of questions, um, and with overall the way it was conducted. And I wish GirlScript all the best. You all are doing a great job. I wish you all the best.